Yes, we're back. So basically, I was backtesting my strategy, trying to look for ways to improve and make it more precise because last year the strategy was literally just free money. It was like a 90% win rate and very simple strategy. But this year, with the war, new markets, new year, new period, new quarterly period, basically, you gotta keep analyzing and improving and adapting. So I hit a trade which I'm gonna draw for you, and I wanted to just basically. There's meant to be a lot of drawings on the screen, like too many that it looks like it's just too much. But I wanted to analyze this for you and show you how this trade is because I wanted to maybe help you add a confluence to your trading and it could help you. Maybe your strategy is similar and there is like about two or four or three strategies involved in this. So if you have a strategy and you combine it with one of these confluences, maybe it will make it better for you. And I want to be able to help you and give you the chance that maybe you are the person that is looking for that small confluence to change you from a break-even trader to a profitable trader. So let's break this down. Basically, the big point is daily is bearish. We've just hit liquidity here, but as you can see, the price is going down. We're bearish. In this moment here, I did think that we're gonna maybe try to push up and be bullish, but instead on the daily, we had this rise here, which was enough to catch buys. Um, Obviously this POI here didn't have any liquidity above it to be strong, and it didn't sweep a liquidity point to become a strong order block that could react price. So instead, if the price came here and swept this low and did this exact move here and went up, then came down, and then I think it'd go up. But we are now bearish on EU, and then the 4 hour is also just nice and simple. It's bearish in the last many hours from where is it from Monday of this week, and now it's we're back testing Tuesday. Then our okay, also I'm looking for liquidity points. That's what it was. I have a liquidity point here and maybe potentially here because it did break structure here, so this would be an internal low. Why isn't what's happening? Hello? This thing just flew up. You have this, and then this is a low. Wow, yeah. Here's your break of structure. So that could be a low. Now, 1 hour, 15 minute, everything's bearish. So we are just simply looking at sells. Now, the market was about here. So anything to the left of the market, we saw. Everything to the right, we didn't see. So we have obviously our 15-minute liquidity over here, and we retested that liquidity point that I marked, but we can delete that. We've got a liquidity point up here, and we swept 4 hour. I think right now this might be glitching out. Yeah, the daily was here, so it literally just about I have in my notes, it swept the daily, and the moment it swept the daily, we actually had an entry over here which I would have entered probably on this candle here first, and if I wasn't patient I would have hit stop loss, and then sometimes you get a retest on your POI, so I would have entered here, and then as you can see, you've just got nice trades where you can target this liquidity over here to the left, which is a 1 to 8, this high which is a 1 to 11, or you can target the 15 high which is over 1 to 10, or so that's not the trade we hit because we were looking for sells, and this is a bit more aggressive. It's not so passive, and it's not so much patient. It's a bit dangerous because you've entered straight away instantly after a big liquidity. But obviously, if the strategy, I know how it works and I always enter, and I know the win rate is like 60%, 50, 40%, it's going to be profitable. But also, after a huge sweep like the daily, we could go up at least a little bit to retrace to get some liquidity, which we did. So that could have been a trade. But I'm looking for sells. So let me just have a sip of coffee. We waited and we swept the 15 high up here. Now we broke structure here or change of character, and I was waiting for liquidity, so we swept this high here, but we didn't get any entry. We broke down, retraced. If you use equilibrium, you could have been in this trade. If you use equilibrium, you would have been in like this, which is a pretty nasty trade to hit because it's straight after 15-minute liquidity. You'd be in this, but again, I missed it because it's not exactly very precise. It's just one equilibrium and that's it. So I waited. Then we had the drop here. If we mark out, we had a slight break of structure to the downside, and then if you were to consider this a high, you would have had, if you consider this a high, this would have been a liquidity sweep. That means later when the market was moving around, you would have this as your POY, more maybe, and you would have entered here and took a loss. Again, if you're entering aggressively, you already have a 1 to 8, about a 1 to 8 winner here. You have a winner here and a stop loss here. So if you're playing aggressive, which sometimes I do with the strategy, you have two winners and you're up like 1 to 15 or within these three trades and the stop loss. But we waited, we were just being very patient. So when you reanalyze, you see that this break of structure to the downside, this leg had no fair value gap, showing me that it wasn't a fast move and there wasn't many buyers here. So I wouldn't consider this a valid break. So then you wait. This is not a valid liquidity sweep then. So we have to still wait to generate liquidity. We broke here. Again, we have a small close, which is not the best, but we had a fair value gap and three big candles down and a longer wick, showing us that there was more sellers here. So now we use this for liquidity and we have our break to the downside. Now we've got a few things in here. We have an inverse fair value gap, which I said you've got traders who trade inverse. We've got the inverse. We've got the normal fair value gap here. We've got what I prefer more is the POY or the order block since we swept liquidity. And then we also, later on, I will show you there's equilibrium. But we have the fair value gap here and we touched it the first time. And I have in my notes that if you were aggressive, you might have entered it. But the thing is, the fair value gap is so big, so I wanted to stay patient, and we just slightly tapped it. We didn't touch the breaker block here also that is marked out. We didn't touch the inverse, and we didn't touch our POY. So I wanted to stay a bit more patient and then find liquidity. So this ended up becoming liquidity here. And when you check the 5 minute, on the 5 minute, that was the bottom wick of this 5 minute fair value gap, and now combined with everything, 5 minute POY. Oops, wait a second, and 5 minute POY. So I'm not sure, did we hit the body? We did. We did. So we are now, for example, we don't see this green candle, so we only see the two down candles. We've got fair value gap and the POY. So that's why I didn't enter on the first tap. Now we push price up, we sweep liquidity here, we sweep this liquidity, we fill the 5 minute fair value gap. So there's a lot of confluences here. Fill the 5 minute fair value gap. We hit the big purple candle here. Well, okay, this is the fair value gap, that's the bigger one. So let's say the bigger one now, the 5 minute POY, we hit that. Then we hit deeper into our fair value gap. Then we hit our breaker block. Then that's like it's very nice. We hit a inverse fair value gap. Okay, and now we get deeper. We hit equilibrium 50% of the fair value gap that pushed the price down precisely, and we entered 50% of our full push. So now we are in the premium zone with zero closes above it. So to be honest, if you trade for value gaps, you would have entered this and stop loss at least around 50% or above, like around the top of the fair value gap. You would be still in this trade even when you went to stop loss. But I don't like this type of entries. Too big of a stop loss. I would have entered here, or maximum I not I would have, I did enter, but if I was being more safe, I would have entered here and still hit at 1 to 3. Obviously the or will be a bit smaller, but I entered a bit more aggressive after the first big wick and a nice close. But this candle would be a better entry because it has something about it that we prefer to use, and it gives us a good indication of sellers being in power. So I would have entered better here. So basically that's the trade, and I just wanted to show it to you that yes, the markings are a lot. There was a lot, and if you marked out everything, there's too many things. But when you break down the market and you break down your entries, they become very simple. And once you learn your building blocks, the basics, the very simple stuff, you can combine them and make it into something that is not basic, like this. This is not basic. You had to be patient, analyze, wait, bias, enter on the 1 minute. But when you combine everything and take it slow and easy, you get really nice trades, as you can see here. And also, if you were aggressive, you could have had how many? Three winners, 1 to 8, 1 to even this one you would have held. So 1 to 10. This is actually a crazy day, to be honest. You could have had like a 1 to 19 plus this 1 to like 20, or in 4 trades with one stop loss. No, two stop losses, because we are fair and we said we would have taken a stop loss here on this. So you would have had three winners, two stop losses within about 4 hours of the market playing out. So we've got London and then start of New York. Also, yeah, this is actually a little bit of a key point. After we were in this area, we were close to New York. So whatever happened in here, I wasn't kind of looking at it too much. I was waiting for New York to open, which it did. And usually New York likes to manipulate or collect its own liquidity. So New York ended up manipulating this London high, but also sweeping a 5 minute high in here for its own liquidity. And then from there, we played out the sells. So yeah, I hope this helped. I hope this gave you a new confluence to add to your trading, or showed you not how to be patient, or how to build a simple step-by-step building block trade to create a nice big heavy analyzed trade. If you want to go into the Discord, just comment and I will send you the link. It's a free Discord with 1,000 members. We've got TikTok, we do live calls, we do sharing trades and all that stuff. Or if you want to just be on YouTube, stay on YouTube. I hope it helped, and I'll see you in the next video.